as you look at what's happening with small cap stocks and you're looking at what's happening with the market, I think the answer is yes. I think the Russell can continue to keep moving higher, but I think we got to put this whole advance into perspective. When I go through and I look at all the stats in the market, things look as extreme to me today, to the upside with this melt up that we've had, as they do to when we hit the bottom of the market in March 20 of 2020 last year. In fact, when I go through and I look at how many stocks are in some form of an uptrend, Dominic, it's over 80% of all stocks. And when I say all stocks above a 25 million market cap at a $2 price. So we're looking at over 4,500 stocks. We also have 289 of our industry groups that are making 26-week new highs today. That's just as extreme as what we had seen back at the March lows. So while I think everything is great and more vaccinations happening and earnings recovery and all these things are absolutely terrific and moving in the right direction, for me, it's a little bit of a reality check right now. Everything is so good. The question is, how does it get a whole lot better than where we are right now? Market breadth has been great. To me, it feels like we're due for a pause. I don't think the longer-term trend is over, but we're definitely due for a bigger pause and a bigger setback. And to be clear, our longer-term year-end objective is still 42.25 for the S&P 500. But we do need to see some healthy checkbacks along the way here so this market doesn't get too far ahead of itself.
Craig, over the years, I've spoken to a lot of technical analysts out there. They've tried to impart some of their wisdom on me. I've tried to use some of their tools in the past, both in my life on Wall Street and as a reporter here. I'm curious, when it comes to market volatility, the likes of which we've seen in certain pockets of the market over the last few weeks, specifically in cryptocurrency, specifically in short squeeze stocks, specifically in marijuana stocks, are there any things out there from a technical perspective that have been either damaged, reversed, confirmed because of the recent market volatility?
You know, if we take some of those pieces straight across the board, talk about the cannabis stocks, those charts all still look very much in uptrends. But Dominic, I would define those uptrends as basically parabolic, meaning they're going up so fast, they're almost bending over backwards. You're seeing the same thing happening with the cryptocurrencies, and I've spent many years looking at the cryptocurrencies, and I look at many of these things and I'm saying, I want to sell or trim positions in some of those areas right now because it's been so strong. It's been up so fast. I go through and I even look at some of the clean energy type names. And again, the momentum and the moves that we've seen in these things are been at extremes. And some of these extremes, when you look back in the past, Dominic, they're at kind of momentum indicator levels that we've seen at prior peaks. So again, not to be the individual that's trying to throw cold water on the party, I'm just trying to look at this market with a little bit of a sense of kind of prudence and a little bit of a perspective of we've gone pretty far pretty fast. We've baked in a lot of good news. I just wonder how the narrative of this market's going to start to change as interest rates continue to keep pushing our way higher. And ultimately, higher rates is probably going to lead to some multiple compression. So I hope earnings pick up fast enough to offset that.
All right, so technical analysis, part art, part science, certainly a whole heck of a lot of math involved here. With all of those things in mind, are there certain places within the market right now that are poised, technically speaking, for more relative upside than others? Where would you be committing new capital right now based upon the charts?
Based upon the charts, Dominic, I think you got to take a look at the industrial sector. This is the sector that we are overweight. And to be clear, for all the listeners, we still remain overweight tech. We have been for like 256 plus weeks. And we also remain overweight the consumer cyclicals and also in the industrials. But for new capital, I'd be looking at these industrials. As this reopening trade starts to pick up, I look at things like, OSK, so Oshkosh. Nice big double bottom in the making there in that industrial name. And I think you're going to see a nice move higher from there. I'd also look at in the financials. Yield curve continues to steepen. It's very clear that the 10-year bond yield is moving higher, and we think it'll work higher toward 150 to 175 by year end. We want to own the banks, and you want to own some of the financials. Stocks like Co-America, stocks like Visa, MasterCard, Capital One, all look like stocks that continue to look constructive to us. So those are two areas. And then, Dom, I got to tell you one other thing. As I've been having calls with clients since this month's publication has come out, if I look at the 10 top performing stocks right now in the S&P 500, and I'd simply do a quick poll with individuals, pretty much nobody owns any of those top 10 performing stocks. A lot of those are energy stocks that have been in the top 10. And there have also been stocks like Ford and GM that have been under love for a while. So this sort of move toward the value side from the growth seems to be catching on, and certainly is a place where investors are going to have to commit some capital. Even though they don't want to do it in energy, it's so under-owned, it's probably a good spot to be.
Shepard Smith here. Thanks for watching CNBC on YouTube.